Hi traders, hope you're having a great trading week. The beauty of the type of trading that I do is that you don't need to do any research. You don't really need to do any preparation for trading, and you can sit and take a trade, at any time of day, and the trade will, last 1 or 2 time frames. So if the market volatility is good enough and you trade in the 1 minute chart, that means the trade lasts, 1 or 2 minutes. And that's what happened today. And in actual fact, from the time that I got to my charts this afternoon and the time that I'd entered and exited my trade, it was actually 1.5 minutes. So that's that's not a bad day's work, is it? 1.5 minutes. And I'm going to talk you through this trade. What I saw, I was just waiting for my mum to come round and have a chat. And I was sitting in my living room waiting for her. And I thought, I'll just see what's going on the in the markets. And the Dow had opened 15 minutes before. So I went to my laptop that you can see behind me and flipped it open, got the charts open, and there it was, a setup waiting for me. I pressed the button to sell, and a minute later, I exited. So have a look. I'm going to talk you through why I took the trade, what I saw when I opened the laptop and put the charts on, what I saw that encouraged me to take the trade, how I judged the risk and likely reward in the trade, and I hope that you're going to be able to learn from that. But this is a system that I've been using for a while now. It's one that I teach my traders, and it can be, highly successful if you trade it right. Now, you aren't necessarily, experienced enough in your trading to be able to switch some charts on and take a trade straight away, because it might take you longer for your brain to start matching things up so that you know what you're looking for. But after a little period of time, when you know a system, you've got it, the system definite in your mind, you can do that. And that's the thing. And so 2 minutes after I turned my computer on, I turned my computer off because my mum turned up. And we sat in here, and it's very nice in here. This is my living room, and you can see that beautiful view. It's going dark now, but it's a beautiful view of the garden. And my little laptop there with the charts on it, just in case there was anything else cropped up. But I got talking, so that was that. Anyway, let's have a look at the trade. So this is the screen that I turned on, near enough like this. What we see on the chart is the market's just opened here, and it's put in a couple of red candlesticks to start off, 3 red candlesticks to start off with. So the market's effectively going up and down, making lower highs and lower lows. That was a higher candlestick low just before we had a full green candlestick up here when I turned the chart on. This is the 5-minute chart here, and I noticed that the price was rejecting down from the river of value, which is the 8 and the 20 EMAs. So it was bouncing here off the 20 EMA, the red EMA there. And you can see how that translates into the 1-minute chart with higher highs pre-market, and then we're getting lower highs, lower lows, and the market opens, and it all looks red, green, red, green, red, green. Well, it's choppy, and people say you can't trade this, but I love it. And it's, you know, for me, the probability is extremely high when people stick to the rules that I've set for them. And so, you know, you can see effectively it's in a trend channel. The high, you know, you could almost put a line down there and a line down here, and the price is operating in between. And you've got this river of value, which means that you don't have to draw trend lines in. And this river of value, you can see the market was penetrating it to the upside and then going down. But it's when it's spending less time above it than it is below it, then the chances are it's going to reject from this area here, which is what it did. And then it came up again and rejected down, came up, went down. And when I came to my screen on the 1 minute chart, I was looking at a full green candlestick here. Started there, was all green, and it was up here. And I thought, well, it looks like if I was a machine, I would start selling around this area here. And that's what happened. You know, you can see highs here, lows down here. So anything in this top third, the machine looks at it and goes, I can sell here and make a profit that is at least one time my risk. And that's what happens. You tend to find that algorithms rule the market these days. And they were selling. They got to a reasonable height up here and then they started selling. And so I don't, you know, I look for a different method to that, but it was in that selling zone up here, and I got confirmation that they were selling by this tail emerging, and I entered right on the 20 EMA because this I thought was going to bounce down from the 20 EMA, and that's exactly what started happening. Now I had, you know, that I made that assessment in less than a minute because I've got definite indicators that I look at for, you know, for when it's going to bounce. If price was right down here, I'm not going to sell down here. I wait for it to get up to a river of value, for everything to say the same thing, and then I'll sell. And this was a perfect opportunity to sell here. And look what happened within 40 seconds, price was down here. And, you know, 11 points, 12 points, including the spread. That's not bad. You know, that's not bad. My risk was about 3 or 4 points, this bit here. So if it price, when I entered, if it had have gone back up here, then that's not bouncing down, that's bouncing up, and therefore I could exit here. So I had a risk of 3 points, and I'm already on 3-to-1 reward to risk in the trade, and therefore I exited just below there. And what happened next was that price came down a little bit more on the open of the next candlestick and then went right back up here and bounced and went down again. And there is method to the trading madness that occurs. If you understand what the institutions do, what the hedge funds do, what the algorithms are set to do, then you get a good idea when the volume's going to enter the market in one direction or another. And, you know, when you take into consideration context, as in the river of value between the two EMAs, I'm wondering how long it'll take before somebody else mentions this river of value, because I came up with the idea. But people like it and it makes sense, so I'm sure somebody else is going to be mentioning it soon. Anyway, this is my system, this is what I teach, and so in here you've got, within the first 15 minutes, 4 or 5 trades, and I took one of them. I got my 3-to-1 reward to risk and my, 550 quid, and I shut my laptop and only opened it again when I decided I'd do this video later on in the day. Because that's me, that's me. I only needed to trade for 1 minute today and to actually be working, I guess, for that period of time. And that now I can spend a bit of time doing this video and hopefully adding value to your trading, because that's what drives me, that's what gets me out of bed. I hope that you've found that useful. I hope that you can piece together some of the nuggets from the trading experiences that I have and that it benefits you with your trading. Well, have a great rest of the week and I'll catch you on the next video. Any comments, any questions, do leave them below, and please do subscribe to the channel. Cheers for now. Bye.